Hi, everyone. Mike White here. Welcome to this week's vlog post. First week of October. Really important information coming about today, tomorrow, next week, all of which can be market movers. And in fact, not only statistical information that's coming out that could impact our markets, but more than that is the political environment and things that are going on, not only in the economy, but across the country. And it's really important to take note of these things because they certainly can have an impact on our rate environment, our housing market, overall consumer sentiment. And I think it's important that we become aware of that. And especially when there are things that are known, things that are actually going to happen, that we are at least aware that these market movers are in play and that we prepare ourselves that if something comes up that we're not blindsided by it, and we have information to share with our clients and our referral partners, as well as what the impact might be nationally or locally based upon this information. So it's really important. Again, I'm going to outline some things that I think are important to pay attention to. Do with it what you will, but again, all of these things could be market movers, and I think it's important for you to get on top of it. So let's take a look again as a baseline where we sit. I was just pulling the markets this morning before I recorded this. 10-year, we're at 10.721. The UMBS 30-year 2.5% coupon sits at 103.05. And again, you can use whatever coupon you want. I'm just singling that one out as one that you can use for a reference point. The 10-year Treasury is sitting at 152. In the past, we've seen probably in the past year in the bond market, we've seen a high on January 4th of 21 of this year, 105.63. So if you want to point to where the lowest interest rates were, the highest price paid for mortgage-backed securities, you can go back. If anybody wants to know where the bottom of the market was, you can point back to January 4th of 2021 and say 105.63 was the number. The low point that we've seen in quite some time, believe it or not, was in March of this year, March 19th at 102.20. Again, you can see there's a better than 300 basis point difference from January through March. Same thing holds true with the 10-year Treasury. 10-year Treasury was at 171 on March 31st of 21. And it wasn't that long ago in October of 2020. So just about a year ago, the 10-year Treasury was at 0.709, so less than 0.71 basis points on a 10-year Treasury. So we're using that for a point of reference. So when people, and it's not uncommon that people have been engaged in the market or been available for pricing, that we start a basis, a basis of understanding of where things have gotten. We've also seen things like in our business, refinances drop off this past week, better than 10% and better than 16% year over year, but interest rates are barely 1/8% higher year over year. So there's certainly, understandable that when rates start to tick up, not as attractive as when rates start to tick down. Wasn't that long ago that 3.99 and 3.49 or 2.99 were extremely attractive and people were rejoicing. When you go the other way, all of a sudden those numbers start to become less attractive to some people because they've missed the bottom. You want to point to the bottom, point back to January 4th of 2021. The other thing that we're dealing with, obviously, is home prices, and Case-Shiller has pegged the number to be 19% year over year, which is rather incredible. And so, it's really important that you get your basis as where things are. And obviously you can break some of these things down much more locally when it comes to home prices, but national numbers are national numbers. And for most of us, we're dealing with conforming or government rates, and the national numbers are what we're all going to base ourselves off. So the events that are really coming up shortly that are predictable, things that are actually going to happen, scheduled to happen today, just probably maybe even before you even see this recording, this morning, 8:30, September 7th of 21, we're going to have initial jobless claims. Tomorrow, we're going to get September the 8th, we're going to get the jobs report for September, and potentially even more market moving next week. 10/13, we're going to get the consumer price index report. And on the next day, the 10/14, we're going to see producer price index, which is really going to pin inflation. Now, the Fed has talked about removal of some stimulus, the tapering, if you will. They've signaled that they're getting ready to do it. It's not a matter of if, it's a matter of when. They're not even looking for great numbers. They're just looking for numbers to reinforce. And I think the inflation numbers, the Fed has already changed their language about this whole transitory thing that we've kind of made fun of over the last few months, and come to the realization that this inflation is probably going to carry well into next year before they get a handle on it, which is, pretty relevant to most of us because we all are consumers one way or the other. So those reports are going to happen. They're on the, they're on the calendar. You can just watch it, and it could have an impact on your markets. And potentially, even more importantly, the things that are currently out there in our environment that are certainly market movers, that are things that you want to contend with, and may really change your market, or it impact things that we're doing or people's decisions, but they're out there in a less straightforward way because the actual impact may be huge or really nothing. And the first thing that comes to mind is we're going to see the conforming loan limit in January go up to 625,000 for many of us. That's a very meaningful number for a lot of clients who never see loan sizes anywhere near that. The fact that the conforming limit goes to 625 means nothing to them. So depending upon where you are and what your market looks like, this huge jump, and again, $75,000 increase on the lending limit, really opens things up for a lot of people in a lot of ways, especially those of you who were refinancing people who have had jumbos. It wasn't that long ago, just a few years ago, where the Fannie Mae limit was, 415. So we're seeing huge changes, and that can be relevant to you, and you need to be aware of it. The other thing that comes into play, obviously, what we're dealing with now is much more political in size and scope, which is the conversation over the debt ceiling and what's going to happen with that, and how the politicians remedy that situation. The ongoing conversation now about whether or not America wants to buy into the conversation that $3.5 trillion really equals zero. Very interesting discussion politically about how that gets spun, and whether or not people see that you can spend $3.5 trillion and it really does cost nothing, or they choose not to believe that. I'll leave that for you to play with, but it is something that is out there and will impact the markets one way or the other. We also have to deal with the pending possible infrastructure bill, whether something, nothing, everything gets passed, who knows? We're dealing with, everybody now has recognized supply chain issues. It is impacting people. It is causing inflation. You can't get past the fact that there are significant challenges in our supply chain, and are things going to happen to make that better or worse? And what's going to happen? They've already talked about the holidays and holiday shopping, and I don't know if that is a ploy to push the economy, or there really is something going on that we're unaware of as to why these things are happening, but the reality of it is you do need to be aware of it. Other things that orbit, depending upon where you live and what is important to you, or where consumer sentiment or political sentiment may be. We're dealing with the southern border. We're still dealing with COVID. We're talking about vaccines, potentially boosters, politically charged conversations throughout this country about critical race theory, the FBI targeting parents who are complaining to school boards, and it goes on and on and on. So depending upon where you live, these topics may mean nothing. They may mean everything to you and your marketplace. And I put them out there because I do have a diverse clientele who are engaged in these conversations all across the country. And to some of my clients, some or all of these things mean absolutely nothing. And to others, it's a significant impact to them in their marketplaces. So there's a lot to talk about. And I want us to communicate with each other about that. And as always, questions or comments can be directed to Mike at imtcoaching.com. And I look forward to talking to you again next week. Take care.